I've mentioned many times, the whole crypto market is driven by two things: network adoption, which is the long-term trend, and then in the middle is the liquidity cycle. The liquidity cycle hit a bottom in June, and we started seeing the forward-looking indicators come up. And we've seen already the central bank balance sheet was led by China, Japan, and then the US. That liquidity cycle is in full flow now. So that should continue all the way through till 2025. And that's why we started Crypto Spring. It happens every time we get to this point.
Raoul Pal, a distinguished economist and former hedge fund manager, holds a bullish outlook on the future of the cryptocurrency market. For those contemplating investing in Bitcoin, Pal advises taking into account the present phase of the economy's liquidity cycle, which gauges the quantity of available funds for expenditure. The recent surge in Bitcoin's performance can be attributed to heightened network activity and the diverse values that each blockchain generates. Following a slump in the liquidity cycle last June, positive signals have since emerged. According to Powell, the central bank balance sheets, particularly in China, Japan, and the United States, are operating at full capacity and will continue to do so until 2025. As a result, we are currently in the midst of a cryptocurrency spring. Powell believes that an inevitable wave of liquidity will support risk-on assets, including crypto, which will trigger a surge in capital and new innovations that attract the next batch of users.
So forward-looking, the liquidity cycle should continue. And the banking situation is one of the examples of how the liquidity cycle comes in. The Chinese continue with M2 growth, the use of the central bank balance sheet. The Japanese have obviously been using yield curve control. So for me, we're in the right cycle now, and this should continue to play out. Now, within those, you get plenty of volatility. Usually you get 35% pullbacks are pretty common. Is this a 35% pullback we're in the middle of, or a shorter one? Don't know, don't really care. I did all of my allocation. I haven't sold anything ever. I just bought more in June, October, and January, and just used that opportunity into the big sell-offs, and that's it. Yeah, so the tightening, it's not about interest rates, it's about liquidity. So the change in interest rates is a part of the liquidity cycle, but the central bank balance sheet is the predominant driver plus M2. There is about a 90% correlation between the price of crypto assets and a global liquidity index that we use, which is a function of central bank balance sheets plus the Fed balance sheet. Look at the G5 central bank balance sheets plus their M2. So look at the central bank balance sheet there, which was the injection of liquidity into the banking system, and all assets rose with that. And so, yeah, the rate rises are a red herring at this point.
When asked about the potential decline of Bitcoin dominance, Raoul Pal explained that demand is the crucial factor in determining its dominance. Unlike other assets, Pal noted that each drop in demand leads to significant price hikes due to Bitcoin's ongoing exploration and adoption stage. Pal also previously highlighted in February that Ether's inverse chart demonstrated a conspicuous GMI crash pattern. Renowned economist Raoul Pal has previously forecasted that Ether could surpass $10,000 by 2024. He opines that Ether has lower risk than other cryptocurrencies and tremendous potential for growth. Pal notes that Ether stands out from other token ecosystems due to its broad range of users and uses, which is a unique advantage. Additionally, Ether's staking feature offers a yield to crypto holders, creating a money market curve akin to traditional 2-year bonds. Furthermore, Ether's burning mechanism has made it even scarcer in supply.
Right now, if you look at the number of different applications being built on Ethereum, you generally think that the network will likely grow faster over time than Bitcoin, but that can change. We've got ordinals, we've got other use cases for Bitcoin. We could see global central banks or sovereign wealth actors involved in Bitcoin. So it depends. I think likely Bitcoin dominance falls over time because of the lower number of use cases. But it's not something I worry about all day or think about. Yeah. What you've done with ETH is you've created a money market curve of what is a reasonably complete digital economy, and the money market curve now allows people to stake at will, reduce some risk in the system. There's no real reason why people at the early stage of a cycle are going to take their ETH out. They will do at some point and put it into other stuff as they go out the risk curve or go down the risk curve and go back to Bitcoin. But I think it's a very sensible thing. And actually, it's setting up for something I think a little more complex that I've got my eye on. Is we've got an issue that staking is going to rise in ETH because it's got a good yield. It's reasonably understandable. So it gives us some sort of risk-free rate within the space. The issue is you've also got the ETH burning, and you end up with a very limited supply of ETH in a bull market. Now, I understand that that as the cost of compute goes up...
Raoul Pal emphasizes that liquidity is the driving force behind crypto cycles, not the Bitcoin halving, as widely believed. He stresses that the amount of money in the system and its rate of change are the significant determinants in the world of cryptocurrency. Pal remains optimistic, noting that liquidity always returns and the network continues to expand. He points out that the crypto market has already drawn substantial investment, which will fuel its growth. Powell forecasts a surge in the crypto market, with the number of users expected to increase from 300 million to over 1 billion during this cycle.
It so happened that Bitcoin was launched exactly at the time that global interest rates went to zero. Everybody reset their entire interest rate and their entire debt burden at the same time. Everybody around the world. So every central bank, every country, every corporation, everybody reset rates at zero. It's created, and most of that debt is between 3 and 5 year debt. And what you've got is this 3.5 year cycle to 4 year cycle. And it's a global phenomena, and it was driven by interest rates being zero in 2009. And that is the Bitcoin halving cycle, because Bitcoin was launched exactly at that point as well. So the liquidity cycle is the predominant driver. Now, doesn't mean it's wrong to follow the Bitcoin halving cycle, because it happens to be the macro cycle as well. And that's all well and good. And if people understand it in those terms, that's fine. But it is actually the liquidity cycle that is global. And it is a complete structural change to the world that happened after 2008. That if you look at the ISM cycle, so the Institute of Supply Managers, it is exactly 3.5 year cycles. And we've never had this before. And it's just driven by the debt refi cycle globally.
Despite the current negative sentiment among investors and the likelihood of a mild recession, Raoul Pal remains bullish about the cryptocurrency market's prospects for 2023. Based on his forward-looking indicators, he suggests that the current downturn will be brief and liquidity will return to the market after April 2023. While there may be occasional interruptions or retractions, Pal maintains an optimistic outlook for the cryptocurrency market's expansion. On this note, we conclude our video. Do you agree with Raoul Pal's perspective about global liquidity cycle and recent performance of Bitcoin and Ether? Share your thoughts in the comments section below. If you found this information helpful, then like this video and subscribe to our channel. We will bring you more updates in the future.